Hey everyone, welcome back to another edition of Super Prime UK with your Super Prime UK valuation specialist, myself, Rob Cohen.
Myself, James Wild.
Thank you for joining everyone. Welcome back. It's been a super busy week in the market. Lots to share, lots to tell. Straight to James, let's go for it.
Thanks, Rob. New instructions this week, slightly down on the bumper record week we had last week, 281 for this week, so still positive, in and around that 300 mark. And as for sales, we're at 142 for this week, which is becoming about the sort of average we've seen over the first quarter or so of this year, Rob. It's at a time, a short week this week, two short weeks in a row, either side of the Good Friday, Easter Monday break, so slightly higher number in terms of the withdrawn properties we've seen this week, Rob. Bit of a spike there, but what I imagine is going on the market, a lot of people will relaunch their instructions after Easter, which could help some agents in terms of their lack of stock, and hopefully it might sort of bring a new tranche of properties back on the market after the Easter break.
Yeah, that is the trend, and I'm sure that will happen. As I promised you last week, we now have the closing figures for Prime, Super Prime in March, and as discussed, the numbers were pretty clear. It was the strongest performing month of the year, with top numbers for 2 million, 3 million, 5 million and 10 million Super Prime Plus. Pure reflection of the market activity, the volume of transactions, the volume of trades, and the demand that there is to acquire a Prime, Super Prime property in London and the surrounding areas. No surprise there, and we will have to keep watching that after Easter and see if that robust, strong market conditions in Prime, Super Prime continues throughout 2022.
Yeah, thanks, Rob. The super prime sector in London has been remarkably robust and strong for the last 24 months, really, making up a lot of domestic buyers. I think some of the Middle Eastern international buyers have been slightly slower than we've anticipated, returning to the market. But I think this could be the summer where they maybe come back to the market and, push that market from strength to strength. It's the best performing residential market across all sectors, that super prime London market. Just last thing on the data, very good pipeline in terms of under offers, just under 250 for this week. So hopefully that'll bring positive news for the following weeks, because obviously 2 short weeks in a row here, so the data will be slightly skewed by that.
Thanks, James.
Okay, so in a week, some more economic news, Rob. We've got inflation rising for the fastest pace in 30 years, as we found it, and to no one's surprise, and as all the speculators and analysts were commentating, inflation's hit 7% for March, just as the cost of living, is soaring. Although inflation is a global issue, it's not just the UK that's struggling here. The US suffering inflation of slightly higher than us, 8.5%. So it's really sort of a global concern, inflation, which all the countries are trying to sort of get under control in each of their different sort of fiscal policy measures.
Unprecedented times with the inflationary pressures we're seeing. You've got the historical context of Lehman's 13 years ago or so, quantitative easing, billions being fed into the system. You then have Brexit followed by COVID, and now we're seeing all of that combined together to create what was a low interest rate debt market that's increasing with inflationary pressures trying to be controlled by that. And it's a fascinating economic time with energy prices and fuel prices. So it's going to be super interesting to see how the economy works out this year.
Definitely. I mean, the fiscal measures have such a part to play here. When people sort of weren't working, they're on furlough, they had more disposable income than they do now when they're back working. And it really is such a sort of turned on its head sort of model there, Rob. It doesn't really make sense, but that is the sort of state of flux that the economy is in at present, in terms of reflective of the labour market in that as well. I just wanted to talk about the High Street again this week, Rob. I mean, we've spoken about Oxford Street and Regent Street quite a lot in the past few months. It's a hive of activity at the moment with some of the flagship stores which have closed, come and gone on that street. It's going to be sort of come the end of this year, next year, it's going to be a completely sort of new outlook on Oxford Street. The Mayor of London has reconsidered its consent for the demolition of the Art Deco Marks and Spencer's building on Oxford Street there, so we might not get the modern new build structure which was anticipated. So watch this space in terms of that redevelopment on Oxford Street there. Just wanted to take a look, Rob, at some of the franchises and fashion retailers on the high street. The Gap last year closed all 81 of its UK stores, so quite a bold move there, and has since tied up a deal with Next to sell clothes via their stores, and as well as a sort of Gap branded shop-in-shops experience at selected locations. In terms of the analysis of those 81 stores that have closed, 18 of them, about 22%, have subsequently re-let those 81 stores. 40% of them have actually switched from clothes retailers to food and beverage, which is maybe a bit of a sign of the high street and things that we're going to see in terms of the outlook and the breakdown, the makeup of traders on the high street. Around 39% of the Gap stores have remained as clothing branches, as fashion retailers have moved into those stores, but that's a sector that's under enormous pressure in terms of their physical stores, with a lot of things moving online, and that's how all of those fashion retailers are moving at the moment. H&M, another case in point on that, Rob, 240 stores been closing over the last few months. They're opening another 95, so a net loss of 145 for H&M there, a big player on the high street. The only one that seems to be bucking the trend, Rob, like a lot of these, Primark, who, similar to the low-cost British supermarkets, do not offer online shopping or home delivery. There's always sort of one retailer that really bucks the trend or has their own model which really doesn't fit in with the market but really works in terms of their sales volumes and how it's attracted by the UK public.
Yeah, very impressive. Primark. They have a strong client base, a very loyal client base. They sell their product very well, very competitive pricing, and there is obviously huge demand for that, which allows them to trade differently from their competitors. Good luck to them.
Definitely, and they're often seen as the anchor tenants in a lot of regional UK shopping centres. It's sort of they're sort of the real landmark store which brings people in and people.
Big footfall, which is a major attraction.
Definitely. That's the high street trends as we're seeing them currently. Just on the flip side of that, Rob, and the shine is starting to slightly wear off in terms of two of the main pandemic winners who did incredibly well during those lockdowns and pandemics was sort of Deliveroo, people having, like I mentioned, about having more disposable income to spend or weren't going out, didn't have money to spend on anything. So Deliveroo and ASOS, as trade has slowed as COVID restrictions have eased over the last 12 months. The online fashion retailer ASOS, again, complete shift from them. They don't have physical stores, 100% online. Last 6 months, their sales have grown just 1%. As compared with 24% growth a year earlier. So obviously that's, they've had a real surge during the pandemic, and now that market is maybe somewhat stabilised, Rob. People have re-entered it. A lot of some of the brands we've talked about have rebased their, not necessarily their marketing strategies, but in terms of their physical store strategies on how they're going about selling their products. Whilst Deliveroo has seen average orders, they've gone down by about 10% in terms of the size of individual orders, whilst diners are sort of flocking back to restaurants, revisiting their favourite restaurants, again on the high street. And I think that represents what we've seen on the flip side with some of the fashion retailer stores actually flipping back to the food and beverage market.
Yeah, food and beverage on the high street is coming back strong. People want to go out. the weather is turning, and it is no surprise to me that that's hitting revenues and hitting average payments with Deliveroo. And I think, you know, there's a market for everyone and everything, a good hybrid model of online, offline, high street, at home. And I think that's going to be the dynamics of most retail and food and beverage moving forward.
Definitely, completely agree with that. Just wanted to drop a quick note actually. Sale of the week this week in terms of residential. It's actually my favourite street in London, Pelham Crescent. It was a £10.5 million sale, £3,000 per square foot. So again, bringing you news of some of the prime assets which are trading. In terms of a more sort of commercial sale of the week, Rob, there was Fitzroy Square sold for just under £30 million there, sort of a more purpose-built as residential but operating as an office-based asset there.
Yeah, Fitzroy Square, beautiful, very close to us, really pretty, picturesque, historical London square, and I would say it's not one of the most prestigious ones, but it is beautiful nevertheless. And Pelham Crescent, great road, valued quite a few properties there, and they're very sought after and trade very well. Yeah,
just on Fitzroy Square, in terms, I think that building was last acquired in about 2016, 2017 for a figure in the region of £24 million, which now I think it was closed sort of heads of terms about £29 million. So again, I think that represents some of what we talked about, Rob, in terms of the competitive nature of bidding for those trophy assets. These types of buildings, they come onto the market so rarely, and again, it just represents some of the uptick on some and shift on pricing on some of those prime assets.
Brilliant. Thanks, James. Anything else before we go?
That's it from me.
Just want to wish everyone a great, happy and healthy Easter break. We will be back in 2 weeks' time, and we'll be very much hoping to share with you lots of positivity, lots of good news, great data, great intel and great activity within property, super prime, lending, finance, banking and all other areas that interact in our world. So thank you very much. Have a great Easter. Enjoy yourselves, take care, be safe, and we will see you all soon. Thank you very much. Thanks, James.
Thanks, Rob. Thanks very much, everyone.